One of the things that I find really interesting is that gold is up 30% last year. It's beat the S&P 500. Over 25 years, it's averaged 9.9% appreciation. The S&P was 9.6 with dividends reinvested. It's doubled the 10-year Treasury. It's the tortoise, not the hare. It's not sexy enough, and it just slowly plots along. 30% this year, that Richard Russell would say you've outpaced the Rockstar portfolio 4 times. The value that gold brings, the extraordinary value, its extraordinary track record over the past 25 years and last year, and its woeful under allocation, it's interesting.
Over the past 2 years, the BRICS Economic Alliance has actively pursued efforts to reduce its reliance on the U.S. dollar. While the previous Biden administration essentially allowed these initiatives to continue unchecked, the shift in U.S. leadership has brought a stark change in approach. Former President Donald Trump's recent stance, threatening 100% tariffs on countries advancing a common currency, has sparked opposition and debate. Ironically, some economists argue that these aggressive policies could inadvertently accelerate global de-dollarization. AndySchectman, CEO of Miles Franklin, notes that countries are increasingly aware of the volatility in U.S. economic policies. This uncertainty has strengthened their commitment to diversifying away from the dollar, favoring local currency trade and settlement in assets like gold, which provide insulation from counterparty risks and sanctions. The divide between the global South and Western economies deepens as geopolitical tensions rise. Both sides remain firm in their positions, with no signs of compromise. However, the situation took an unexpected turn this past week when the U.S. dollar dropped from its 2-year high following Trump's shift in tone on tariffs. According to a Yahoo Finance report, Trump recently stated that he would rather not impose tariffs on China, causing the dollar to slip to its lowest level since January. This uncertainty surrounding his trade policy has fueled speculation about its potential impact on global markets. Meanwhile, China has reiterated BRICS' position, emphasizing that the bloc does not seek confrontation, but rather economic cooperation among emerging markets. In a Chinese Ministry of Foreign Affairs statement, officials asserted that BRICS aims for openness, inclusiveness, and win-win cooperation, rather than targeting any third party. Despite Trump's tariff threats, de-dollarization is gaining momentum. While tariffs usually protect domestic manufacturing, Schectman suggests they act more like financial sanctions in this context. It remains unclear whether they will hinder BRICS' efforts or strengthen them. Nevertheless, the global economic landscape is changing, and the dollar's dominance is increasingly under scrutiny. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Project Mbridge is something I've talked about for over a year, maybe 2, and it was a development that is about 4 years long that was between China, Hong Kong, Thailand, and the United Arab Emirates, and the technology is primarily Chinese, and it's operational. Saudi Arabia became the 5th full-time participant in it late last year. So now you have all of these countries and Saudi Arabia as a full-time participant on a cross-border payment system that the head of the BRICS New Development Bank said would trade a common settlement currency. It's a big deal. Now, what isn't talked about enough is that there was another player in all of this, and this is the Bank of International Settlements and their innovation hub. And that innovation hub was helping develop and integrate this into the Western system. And it was always kind of telling when it was interesting when you would hear at their meeting that the BRICS didn't want to upend the whole system. They just wanted to make it more fair and to rewrite it like a new Bretton Woods system, if you will, that they had aspirations of integrating with the IMF and the BIS and integration with the UN and all of these things that were surprising to me. And I probably should have paid closer attention to the fact that the BIS is a Western institution, because here's the espionage part of it all. At the 12th hour, after this Mbridge is operational and was in use, China had the first 2 test trades in late 2023 where digital yuan cross-border with the UAE for delivery of gold and oil worked. It was operational. And at the 12th hour, the operating director of the BIS, Augustus Carstens, comes out and he says, we at the BIS have decided that we can't be involved in any project with countries that are being sanctioned by the West, so we're pulling out and pulling the plug on Mbridge. Now, this is at the 12th hour, basically at their meeting in Russia. It's as if the guy just realized, after 4 years of working with the BRICS nations, that Russia was the R in BRICS. And to do it at that moment will crystallize their resolve. Now, if we look at it with Trump, he's saying 100% tariffs on any of these countries that further their intention of a common currency. Now, he didn't say common settlement currency, but probably that's what he means. But the point of it is simply this. Tariffs are used to protect manufacturing. There's no manufacturing that he's protecting. This is a sanction masquerading as a tariff. It's more of the same thing. Now, I just simply think that if you wanted to really bring everything together, it would be far better to extend an olive branch than to continue down the same stick route with sanctions. Call them tariffs. They're not tariffs. They're sanctions. So I don't think it will change that much. Yes, we may have better relations with these countries, but the fact remains that the 10-year Treasury demand, if you look over the past 25 years, gold has doubled the 10-year Treasury, but the most important characteristic has no counterparty risk. There's no risk of sanctions and of confiscation, and presidencies come and go, and as you can see, the diametrically opposed way perhaps that we will deal with the world between the Biden administration and the Trump administration. So I think these entities think in terms of decades and centuries, whereas we think in terms of days, weeks, and much smaller increments. So no, this will not stop their drive to accumulate gold and to strive to lessen their dependence on the dollar, which right now will be through trading local currencies and settling any excess in things like gold. And they have something called BRICS Clear, BRICS Pay, and now the Bridge. No longer Mbridge, the Bridge. And it's continuing.
Gold prices surged on Thursday, approaching the all-time high of $2,790.17. A breakout above this level could drive further bullish momentum, while support sits at $2,730.56. A drop below this threshold could turn sentiment bearish, potentially leading to a decline toward the 50-day moving average of $2,669.51. Traders closely watch these technical levels as the market responds to shifting economic and political dynamics. The Federal Reserve's decision on Wednesday to keep interest rates unchanged was widely anticipated. However, Fed Chair Jerome Powell clarified that the central bank sees no urgency to cut rates, emphasizing the need for real progress on inflation or signs of labor market weakness before considering any adjustments. Market participants are looking ahead to Friday's release of the U.S. Personal Consumption Expenditures Price Index, a key inflation gauge that could influence gold's next move. Despite its strong performance, gold remains underappreciated by mainstream investors. AndySchectman highlights that gold gained 30% last year, averaging 9.9% annual growth over 25 years, outpacing the S&P 500 and doubling returns on the 10-year Treasury. Yet, as a steady and reliable asset, it often gets overlooked in favor of high-risk, fast-moving investments like Nvidia, Bitcoin, and Apple. Let's get back to the interview.
Instant gratification is not fast enough. And it's an interesting phenomenon, too. My mentor, Richard Russell, said, you make 7% a year, you're a rock star. And he wrote the Dow Theory newsletters for 60 years. And one of the things that I find really interesting is that gold is up 30% last year. It's beat the S&P 500. Over 25 years, it's averaged 9.9% appreciation. The S&P was 9.6 with dividends reinvested. It's doubled the 10-year Treasury. It's the tortoise, not the hare. And it just slowly plots along, 30% this year. And yet, as Rick Rule will tell you downstairs, that 0.5% of allocation from Joe and Jane Sixpack to the Harvard Endowment Fund. There is so little participation in this country that people haven't noticed it. They are all chasing the risk-on sexy trade, the Nvidia, the Bitcoin, the Apple, the XRP, the things that very quickly can make you wealthy, but it ignores so much of the fundamentals of wealth creation and wealth preservation. It's creating a generation of people who think that type of market action is normal. And it's not. It isn't normal. This is not a new thing. I mean, there are manias, there are bubbles, there are ups, there are downs. And while this has been unbelievable to see the type of appreciation, I think it's being ignored by the value that gold brings, the extraordinary value, its extraordinary track record over the past 25 years and last year, and its woeful under allocation. It's interesting. So yeah, the public doesn't get it yet, hardly at all to that degree. That's just it. It's weaponizing the dollar through threats. It's not tariffs, it's sanctioning. So yes, I think it does. And that really, to me, is part of the problem. You look at a currency that is, in essence, $200 trillion in debt. Medicare, Medicaid, Social Security, and government military pensions exceed $175 trillion in and of themselves in their off-balance sheet. So we're $200 trillion in debt. We've weaponized and threatened countries if they don't follow our agenda. And yet we're trying to force people or countries to accept this currency. And that's not right, and that's not how the system ultimately works. So yeah, I do think it's a problem, and I do think that is the the way that the West has operated. You saw what happened as well when you talk about energy, the petrodollar, right? And United Arab Emirates joining BRICS and Saudi Arabia straddling more or less, when there was the G7 meeting just a few months ago, it coincided with the BRICS meeting in Novograd, the one, not the last meeting, but the one before the last meeting where Delma came out and said this stuff. The Saudi finance minister went to the BRICS meeting and turned down the invitation to the G7 meeting. Their allegiance seems to be leaning towards the BRICS, but look at the way the West operates. Gaddafi said he wanted to sell oil for euro, and Saddam said he wanted to sell oil for gold, and you saw what happened. They're no longer with us, and this is what the West has done through coercion. What the BRICS represents is safety in numbers, and I do think it's a trend that will continue because of this sanctioning, because of this coercion, and I just think it's a trend that will continue, and I don't think that Trump, for all of the good things he will do, will change course on trying to make sure that the dollar stays the world reserve currency.
The shifting dynamics of global trade and monetary policy are reshaping financial markets at an accelerating pace. While gold continues to prove its resilience as a store of value, broader economic shifts highlight the growing uncertainty surrounding traditional financial structures. As central banks and investors reassess their strategies in response to geopolitical tensions and shifting trade alliances, the role of gold and alternative currencies is becoming more pronounced. With these transformations unfolding, how will investors and policymakers navigate the evolving global financial landscape? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.